Everyone, and welcome to this webinar in the series of webinars organized by ELP. Today's webinar is focused on the tax impact because of this COVID situation and more effectively for the service sector. As Rohit mentioned, just a few housekeeping points. Everybody will be put on mute, and we will be, if you have any question, you may unmute and raise the question. But as was mentioned, it would be preferable if the questions can be kept at the end of the session. That would just be useful. Before I start, I just hope that you and your loved ones are doing safe and are fine in this unprecedented situation that each of us are facing through. So with that, let's move on into our webinar. This webinar, as we look into this situation that we are in, at the early start of March, everything was seeming fine. Everything was running as usual. And then all of a sudden we had this COVID spreading across the globe, entering into India. And we had the disruptions which had started taking place, partial lockdown being announced, and then a longer lockdown being announced. And obviously everything all of a sudden came to a standstill because of the lockdown. What has been the impact of that? The impact of that has been that there are a lot of obligations that we were carrying under a lot of contracts, open assignments which were going on, and which were all becoming a non-performance kind of, because that came to a standstill. Our obligations were twofold. Our obligations was under a contract as well as obligations under various statutory regulatory provisions. And because of which we were having these obligations are remaining pending, were remaining open and outstanding. What could these obligations lead to? These obligations could lead to damages in certain cases, and in certain cases compensation. And in certain situations, it could also lead to penalties being raked up or penalties being made applicable. Of course, from a statutory perspective, the government has come across with certain relaxations. They have announced certain measures to facilitate taxpayers, etc. Even under certain other regulations, these have been come about. Rahul, can you move to the next one? So as we move into this webinar, what are we intending to discuss? We are intending to discuss the different implications which are arising because of COVID, and what is the tax impact of that. We are not going to be discussing on the business strategies, etc., because we know that you all are very good at your businesses and you will identify the best of the strategies. But each of the strategy, when adopted, is likely to have an implication from a tax perspective. And with GST ranging from anywhere between 5% to 12%, or in certain cases for goods 18%, your efficiency of a strategy is likely to get impacted to the extent and you are made to pay. That is likely to have an implication, and therefore it's very important that as you identify strategies to beat with this situation, it's important that we understand what is the GST implication and mitigate that effectively. And therefore, what have we brought out here? We've brought out here what we call it as the COVID impact of this whole situation. And therefore, we call it as how do you beat COVID for COVID? And this is how the situation is. And therefore, what are we going to be discussing today? We are going to be discussing first, in case of a cancellation or modification of contract, what could be the implication and how does GST implication come about on that? There will be various operational changes, and because of those operational challenges, what are the implications that you are likely to face? And as a result of that, where is the GST impact again coming about on that? Next is the viability concerns. This is becoming a period where expenses are continuing, but cash flows have stopped, revenues have stopped. And therefore, what are the concerns? What are the protection against the concerns that you are bringing into play? Lastly, there will be, as we mentioned, that there is a standstill, and therefore there will be invocation of force majeure. And in case of such situations where again the GST implication comes in, can you protect yourself from GST, or is there surely to be a burden, and how do you overcome that? And finally, there are going to be disputes and damages, and what is going to be the implication on those. So with that, what we intend to cover are the different contents, the tax impact of COVID, the business responsibility and opportunities, government measures, policy advocacy, and what's happening around the world. I will take you all through the COVID tax impact, and then I'll request my partner Rohit and the team. Rohit will take you through the rest of the sections for what the businesses are doing, the implications coming, and the other measures. Now, As we move into the business events and tax implications, what is important to understand is that this whole situation started sometime in March. In March, we were in a situation where business was running normal. And as our financial year end for India ends in March, there was always a push for accruing as much possible into the revenue stream so that we have an effective year ending. There were a lot of agreements that would have been signed, a lot of POs that must have been signed, few advances also must have come in. And therefore, what was all of that impacting? What was all of that resulting into? From a GST perspective, there is a tax implication which comes in, which is linked to the accrual. If you accrue an income or if you receive an advance, a GST implication was coming in. Now, with this COVID situation coming in, there may be a doubt whether the agreement is now required to be gone through, or whether it is coming to a standstill, whether there may be a change in the agreement. And therefore, what happens where in relation to March, if there is already a GST liability come about, you will have to discharge in April. Of course, there is a liberalization that has been given by the government. But is there a possibility that that GST, what will be the impact of that? Because if the service is not taken to its conclusive end, then is there a possibility of reducing the GST, or is it that the GST is accrued? And now when the service is partly performed, the payment is not fully received, it will be construed as a bad debt, and therefore there will be a situation. Second, there may be damages and compensation that service has been delayed, and because of which, or there may be damages compensation that we may want to bring about on our vendors for they having not supplied to us in the normal course, or forfeiture amounts, etc., from our customers, where the customer is now going ahead and canceling the contract, even though we have shown our willingness to fulfill the obligation. So what is going to be the implication from that perspective? Next is the situation of immobility of personnel and installations. Now, as the COVID situation came up and as the lockdown was brought about, what we saw is that a lot of people were held up in a specific situation. Especially in the service industry, there may be a need for movement of goods, capital goods, people, etc. That could not happen. That could not happen. That impacted delivery. That could not happen. That impacted the location of the person, and because of which a lot of other circumstances, certain other issues came up. That could not happen, and goods were located at one place and they were held up. Or we had procured certain goods for rendition of certain services and those goods were again held up. So what is the implication likely to arise? And finally, what are the risks and opportunities in this whole situation? And as businesses start thinking from those perspectives, what is the tax implication likely to come? As we move on to the accrual aspect, one very important point is the aspect of the time of supply. The time of supply is the aspect from leading to which is the liability to GST coming about. And therefore, is the issuance of the invoice the time of supply? Or in certain cases, especially in continuous supply of services, even though there is no issuance of invoice, the contractual obligation or the milestone within the contract itself would result into a time of supply. And therefore, you may assume that, you know, your customer is of the view that, okay, services can't be taken forward because there is a lockdown. You may assume that, yeah, it's logical the services can't be taken forward. But the contract is not saying that. The contract is saying that on certain event happening or a certain time arriving, this milestone triggers. And if the milestone triggers, the GST department is going to assume that the liability has arisen. Now, how do you convince the GST department that you were in a situation where the customer was not expecting, you were not expecting, and therefore it was a mutual understanding that there is going to be no rendition of service? Then why should there be a GST liability? Therefore, in such situations and many similar situations, there could be a condition where the due date may come up within the contract, and therefore there may be a need for determining exactly when is the liability coming about, and therefore is there a requirement to discharge the GST from that perspective. Now, we have highlighted here the definition of continuous supply of contract. It's very important to understand that means a supply of service which is provided or agreed to be provided continuously and on recurrent basis under a contract for a period exceeding 3 months with periodic payment obligations. Now, these obligations will be built into the contract, and therefore it will be very important that you, along with your customer, come about with either a modification of the contract or an amendment of the contract or an addendum to the contract, so that you can very effectively prove to the department that, yes, my contract did say this, but thereafter, because of the situation, we have got together and modified the contract, and therefore, this event now does not come about. Otherwise, you will end up with a liability, even though there is no rendition of service or there was no expectation of the service being carried out. Next, as we move on, the situation is that what has happened now? If you see, there are multiple situations which come about. There was a situation where there is a continuous supply, and therefore whether a rendition of service happened or not, there is an expectation. There could be a situation where there is an advance given, and thereafter the customer decides that no, he doesn't want to take it forward. There could be a situation where the certain advance was given, you carried out the service, and then the customer says, oh, this service is now not useful, and therefore he asks for a reduction. So there are multiple situations in which there could be a reduction in the total value of the service which has been provided. The government has been sensitive of this and has, in the course of their normal process, come out with what we call it as a circular 137. However, addressing only one situation. What is the situation that they've addressed? They've addressed a situation where there is advance received, and thereafter the contract has been cancelled without a supply of that service or a supply under the contract being carried out. In that situation, what the government recognizes is that if you have issued an invoice, then you issue a credit note and adjust the tax credit, or so retake the credit and thereafter utilize either against a future liability or seek a refund. If you've not issued a invoice anyways, then you can issue a refund voucher and then seek a refund of the GST that you may have already paid. However, is that enough? What the government has determined and what the government has been sensitive about is a situation of receiving advance and cancellation of the contract. But as I mentioned to you, there could be continuous supply, there could be part payment, and all of those situations would arise. And the government has not catered to those aspects. And therefore, if you see in case of a continuous supply, there is a continuous workflow of supply, and that would still result into a liability. There is a milestone achieved, and that would still result into a liability. Therefore, what is the implication which is coming about? The implication which is coming about is that in case of continuous supply, there was a service tax circular which clearly mentioned that if there is an ability to invoice because of a milestone in the contract, then it will be deemed that the supply has already been carried out, which is what I was highlighting some time back, that there will be a need that you modify the contract to say that the milestone has not been achieved. There is no possibility of invoicing because the parties have agreed to it. In case of a situation where you have raised an invoice, the customer says, now this service is not effectively useful for me, and therefore you are required to give them a reduction. How would that be treated from a GST perspective? Now, before we go into how would that be treated, let us reflect upon a couple of provisions in the GST legislation. There is a section 15 which deals with discounts. What does section 15 say? Section 15 says that if you are offering a discount at the time of supply, which is reflected on the invoice, then this discount will not be subject to GST. Or in your contractual understanding, there is a clear identification of a possibility of a change in the pricing because in the nature of a discount, and therefore at the end of the complete rendition of service, if it is reflected upon that clause and a discount has been granted linked to the invoice, then again there is no GST implication. But other than these two aspects, if later on a discount is required to be given either because of renegotiation, because of any other aspect, then GST implication will still come up. On the other hand, there is a section 34 which deals with issuance of credit note in case of deficiency in service. So therefore it says that if there a certain service was required, but later on it was decided that the full-fledged service is not required, only some portion of that, a certain proportion of that is required, then if an invoice has been raised for the entire amount, you may issue a credit note for the balance of the amount which is pending therein, and therefore the GST implication therein will be reversed. However, where a service has been carried out as per the scope of work, and thereafter there is a reduction in the payment, it will be termed as a bad debt. The legislation does not talk about a bad situation, and the legislation in fact proceeds to say that GST will have to be discharged on the full amount because the GST is on supply and the supply has happened for the entire value, and therefore there will be no reduction in the GST payment so far as that is required to be done to the government. And therefore this is a situation which we may be faced with as we go through this the current COVID circumstances. And all of these situations, like I highlighted now, have not been dealt with by the government other than the advance in which the contract has been cancelled. Next, we move on to that what is going to be the different implications which are likely to come about as we go through this COVID situation. Now, one very important point is that as we talk about COVID, what is the survival strategy or the viability strategy that everyone is talking about? They're talking about that any kind of cash flow that you are on, please preserve that. That's very important. Or wherever there is a transaction which has been carried out, please see that you conclude that, and so that the recoveries in relation to that or the consideration in relation to that has been collected effectively. And therefore, a lot of strategies are being brought about which may have certain implications on the operations that we are carrying out. One of them is that discounts are being offered. Now, as you offer discounts, as I discussed earlier, that there will be implication from a GST perspective. And therefore, should it be a simplicity discount to be offered, or should it result into a situation such that you are in a position to issue a credit note and therefore reverse the credit and reverse the GST implication on the entire, not on the entire amount, but only on the amount to the extent that it is chargeable. This will mitigate to a certain extent the GST liability. There could be certain subsequent adjustments in which situation you will not be in a position to issue a GST credit note. And therefore, what will be important is, as we discussed some time back, that will there be a mutual consent between the parties? Based on the mutual consent, there is a change brought about in the contractual terms. And because of the change of contractual terms, I can very effectively say that the scope of work itself was modified in a manner that resulted into a change in the consideration clause, and therefore the amount which has been paid is lesser than the original amount determined. And now therefore there should not arise a further GST liability in relation to the balance amount. Bad debts, we've already discussed that if it is resulting into a situation of bad debts, there may be concerns, and therefore you may still have to pay GST, even though there is no reciprocal amount that you may receive from your customer. Finally, excess value or deficiency in service, as I discussed, that section 34 gives you a clear ambit to issue a credit note, and subject to, of course, the credit note being issued within a certain time limit. It is very important that we keep and are effectively aware of each of these provisions, so that depending on the situation, depending on the circumstance, we are bringing into play the right one and trying to mitigate GST implications arising on those. Next one. What we intend to discuss now is from the perspective of damages or compensation. If there is a situation arising that there is a damage which is required to be paid, or some liquidated damage is required to be paid, or a compensation arising, then again the issue which comes up is that this kind of compensation, etc., that you paid, would that be termed as a consideration towards a supply and therefore subject to GST, or compensation that you've collected, would that be termed as a compensation towards a supply or consideration towards a supply and therefore subject to GST, is another question which comes up. If we see the definition of supply, the definition of supply is pretty wide. It says all forms of supply of goods or services or both, such as sale, transfer, barter, exchange. And therefore, if you see, supply includes all forms of supply. So it is wide enough to cover a lot of ambit. In addition to that, you have within Schedule 2, and Schedule 2 only determines as to what is supply, what is supply of goods, and what is supply of services. But Schedule 2 again specifically has another entry which says agreeing to an obligation to refrain from an act or to tolerate an act. And therefore, at times this question comes up that when there is a compensation paid, or a liquidated damage which has been paid or received, is this a consideration towards a supply, and therefore is there a GST implication on that? We've tried to analyze that in the next slide. What we are trying to highlight here is that supply has been considered through certain judicial precedents, and we are referring here to by Mumbai Trust and others, which is a judgment in 2017, where it has said that supply will be termed to furnish or to make available or to provide. That means there has to be a proactive action taken to facilitate the other, which implies the presence of an act by the supplier to another party to whom the goods have been supplied. This is further supported by a couple of other international jurisprudence also. And therefore, the question, therefore, the reflection of the aspect which comes up is that if there is a supply which has resulted into certain benefit to the other, we will call it as a supply within the GST framework, and therefore GST will be applicable. And if there is just a compensation coming through without any supply taking place, then it would be difficult to say that there is actually an implication of a supply being carried out or a GST implication arising on that. Now, why is this important? This is important because, like we were doing for one of our clients, where they said that they were carrying out a large EPC contract, and there was a question raised that we are carrying this out, and there is a lockdown which is going to result into escalation of cost. Various our human manpower is right now going idle, so therefore there is going to be an escalation of cost. And they estimated that of the total 1,000 crore of contract which they were carrying out, there will be at least 100 crore escalation of cost. And when they worked out, they asked us that, is this appropriate and things. And we said that, yeah, this 100 crores, but please understand that when you collect this compensation of 100 crores, it will be deemed to subject to GST, and the 100 crores will be considered as inclusive of GST. So therefore, when you end up paying the 12% as GST, what you're left with is 88 crores. Is that good enough, the calculation of compensation that you have thought of? Now, this could be a significant implication when they're calculating the compensation. And therefore, it is very important to understand whether this compensation, when I'm collecting, whether it's subject to GST or not subject to GST. The overall compensation is arising because of an underlying supply. One would say that this is an additional consideration to the same supply being made. But if the compensation is arising irrespective of or not because of a specific underlying supply, or there being no supply underlying that, then one may be able to say that this is not a supply under GST, and therefore no GST implication should arise. What we've done in the table below is try to highlight a few examples, illustrations on this issue. The first one is compensation for delay in payment of consideration of supply. So there has been a delay. The compensation is for such delay, and therefore the underlying supply continues to exist. Since the underlying supply continues to exist, this compensation for the delay will be termed or will be linked to such supply, and therefore it may be, it would be considered as a consideration towards the said supply, and thereby subject to GST. The second is a situation where a compensation or a forfeiture, and many of your cases may be linked to this, that there is a forfeiture of certain amount because of an advance, out of an advance paid, or there is a certain compensation claim because a certain contract has now been cancelled. The cancellation of the contract results into there being no underlying supply because the contract itself is cancelled, and still you've received a forfeiture amount or you've received a certain compensation, and therefore one may say that that is not arising as a result of any supply, and that is also not arising as a result of any effective effort, and therefore it may not be required to be covered even under the tolerating an act entry, and therefore you may say that there is no GST liability coming about on that. The last one is a situation where contractual recipient seeks deduction from the consideration owing to reasons of deliverables, that it has got a little delayed because of the lockdown and things, and now part of it is useful, part of it is not useful. Again, from a case-to-case basis, it will need to be examined, but typically because there is some part amount of supply made and thereafter there is a compensation or a certain damage or something required to be paid, then it will be difficult to say that there is no GST, but GST will become applicable. In other cases, again, as I said, we'll need to see it on a case-to-case basis. What does all of this result into? What we are trying to say is that our focus from this entire situation that we are in is to look into how do we mitigate the GST liability, or how do we overcome a situation where because of a certain compensation or a damage or a reduction in the total consideration to be received, we are not further burdened with the GST implication. That would require typically a restructuring of the contract, as we saw almost a few slides back, that once the understanding between the two parties is clear, it may be difficult for the department to say that there is still a GST liability arising. And therefore, what are the steps that you should typically take? Of course, study the current contractual position as it stands. Identify the implication from a tax perspective of any amendment that you are intending to carry out of the contract. The important portion will be that you having identified the implications, when should such amendments be carried out? The timing of the amendment will be very important, whether you carry out at the end of the previous month or let that month go and skip into the next month, so that the implication is either minimized or mitigated in an appropriate manner. The next will be that because of this change, there is bound to be a certain tax implication likely to arise. And if that is likely to arise, who is going to bear that? Is it the service recipient or the service provider? Make it very clear so that you do not have a situation where if it is being borne by the service provider, it results into a tax on tax. Next, restructuring of the contract to minimize the overall tax implication. And finally, carry out the amendments such that it is in the most effective manner and the revised tax structures stands to benefit you in such a situation. Last, from a damages perspective, is also to see from a direct tax perspective that whether this would be termed as a revenue expenditure or a revenue income and or a capital receipt. Because if it's a revenue, if it's a receipt which is in the form of because of failure to deliver on certain things on time or arising on account of termination of an ongoing contract or certain events of the contract, you may say that it is a revenue income. However, if it's in the situation of compensation for losing a business opportunity, one may construe it as a capital income and therefore reflect it accordingly from the P&L and from the income tax perspective also, whether it's a balance sheet item or a P&L item. Again, this will vary from a case-to-case situation, and you will need to analyze depending on the line of business that you are and the nature of compensation that you receive. So with this, we come to the conclusion of the initial overall implication from a COVID-19 perspective. I'll request Rohit to take us through the rest of this presentation, emphasizing on business responses and opportunities, and thereafter government measures and what internationally governments have been doing.
Hey,
Rohit.
thank you, Nishant, and thank you all of you for joining this webinar again. Clearly, as we had seen and as Nishant has analyzed, there has been significant impact on businesses in terms of COVID. There have been operational challenges, and in the course of such operational challenges, we are going through a lot of changes, whether it's a contractually or otherwise, and relooking at the tax position. How is business responded to this entire situation? While we are still awaiting the vaccine for COVID-19, equally businesses are awaiting some vaccine for the business, which will have some sort of a sanity in terms of addressing this position on COVID-19. Till then, what businesses are doing and what business has used the formula is what we have seen is that they have developed their own COVID for COVID to answer the COVID situations. And which are those COVID for COVID is? First, the one mantra which is going on today is a cash preservation. Every business, every management is looking at the cash preservation. Cash in hand is the king today. Second is optimization of cost. Third is vendor and customer focus now. Implementation of new normal regime. We have a lot of new regulatory things which are coming up. And most importantly, businesses are not behind in terms of giving donations, and on a humanity ground have been doing a lot of CSR activity. All of this thing will have some GST angle to it or a tax angle to it, which we want to bring to your notice. Now let's go on to the first aspect. How do we as a tax team or the finance team or a legal team effectively help the business in terms of cash preservation when it comes to GST? So in terms of the cash preservation, we have few thoughts. What's happening today in terms of the scenario? First one, revisit the credit terms with the suppliers. What do we mean by this? The first thing first is that all the suppliers have now got at least time till make the payment till June, and who knows that if this lockdown position is thereafter continued as well in May, government may extend this time limit further. So start re-looking at your supplier terms, because if you pay them GST and if they don't pay to the government, effectively you will have out of pocket in terms of the GST amount. Therefore, first thing first, re-look at your supplier credit terms and see to it that if you can defer payment of GST. One issue comes up that, oh, if I effectively defer the payment of GST, will I be entitled to take a credit? Answer is yes, no difficulty. You have a time limit to make that payment within 180 days from the date of invoice of the supplier. And secondly, that the condition which is provided under section 16 of being tax being paid to the government treasury, one needs to look at it eventually when the reconciliation happens. For the interim, there is absolutely no difficulty in taking the credit. Therefore, relook at your all the terms with the supplier so that you start harvesting the credit and preserving the cash. Second, immediate application of a pending tax refunds. We have seen the government has been very active in terms of granting the refunds. Many of the service providers are having accumulated credit situations, and one should start evaluating what are the refund scenarios available and can I really apply for the refund. Third, maximum utilization of ITC, and which is attached with the issue of re-examination of classification of goods or services. What had happened is that since implementation of GST, most of the businesses have taken a call that we will not want to dispute unnecessary, and it is better that let the supplier charge whatever GST applicable. As I am entitled for a credit, I will not get into that sort of a scenario. But now I must tell you that many businesses have started relooking at it, whether supplier is adopting a right classification. Because if they are adopting a classification which is not in the 18% range, it is liable to 12%, then why should I pay him 18 and take a credit of 18? If I can only pay him 12 and take a credit of 12, let me preserve my cash available with me. And many of the cases, as I said, is an accumulation of a credit position. So relook at it, the classification of the services provided by the supplier. There are many services which are still liable in the range of 12%. There are many goods which are liable at the 12%, and therefore please examine the classification as opposed to going by a blindly of paying 18% GST. Then availing the benefit of compliance relaxation granted by the government for tax payment. For us, as a supplier of services, should I avail the relaxation which has been granted to preserve the cash? That again depends upon case to case basis. If I have an accumulated credit, I don't need to really avail. If I have an export of services position, ideally I don't need to avail, because till I don't file my 3B, I am not entitled for a refund. Therefore, even on a case to case basis, one should look at it. Should I avail in terms of the credit which is available? Next is interpretation of the constructive receipt of goods or services. So this is very important interpretation that many of us have been looked at it differently now, because section 16 of the GST law allows us the credit only in a scenarios if you receive goods or services. But if you don't receive goods or services, the credit is not available. Now, what do we mean by received? Received at a place of business, or received by me as a recipient of those supply of goods or services? Unfortunately, the position which many of us have taken earlier, that you should physically receive those goods or services, and then only you are required, you can take a credit. But that is not a contemplated under section 16. It does not use the term receipt at a place of business. In fact, it only uses the term received by the recipient of services or goods. Therefore, examine all sort of transactions. We have seen many of you are relooking at your sourcing pattern, wherein you have imported certain goods which are stuck at the port. You have filed bill of entry. The goods could not have been delivered to your place of business because it was stuck somewhere in transit. You will have to relook at that. Can I avail that as a credit? Or there are services where partially services being rendered, or the invoice is still shown as only advances invoice, but not as a actual invoices for services being rendered. So what will happen because of that? Merely because you have paid advances, he is collected GST from you. We are not entitled to take credit till we don't receive the service. But he started providing services partially, and he has not raised any invoice for that partial invoice, services being rendered. So convert that advance into a service invoice. So we should look at it all of this, that okay, he may not have completed the job, and as Nishant was analyzing, the milestone may be on completion of the entire activity, but he will have to show some event of this is merely not an advance payment. This is actually some services being rendered, so that I can start taking the credit to that extent at least, as opposed to waiting for the entire services being rendered to me. So a lot of thoughts that one needs to start relooking at all the sourcing, whether it's a goods or services, whether the credit position, and then start how do I harvest and preserve the cash. Moving on to the next issue, which is coming up as a second aspect of response to COVID, is the optimization of cost. We don't want to get into the optimization that businesses are doing in terms of their own commercial understanding, whether it's vendor renegotiation or whether it's in terms of employees' salaries and so on and so forth. That's not the purpose. The purpose is from GST perspective, how do I achieve the optimization? The first one is revisiting the contracts involving continuous supply of services. So renegotiate with the vendor for unserved period. Very important here, because if you are doing a contract, let me give an example, a simple contract of annual maintenance contract which is been effectively paid every month, or a renting of immovable property which is every month the amount is getting paid. I'm sure there has been a lot of renegotiation happening, because physically you have not received that AMC services because offices were shut, or you have not received the renting services as such. But therefore all our commercial teams are re-looking at the values of such contract, and at the same time we should start looking at the GST impact on that as well, so that we have a minimum impact of GST. Can they issue me a credit note? Can they show this as a discount? Can they now delay in raising those invoices for annual maintenance contract or a renting of immobile property and so on and so forth? There are a lot of this sort of a contracts which are there, which we need to look at it even from the cost optimization perspective. Second, which is a process automation and more emphasis on online services. We know that the world is changing. More and more work from home, work from digital mode, and looking at new strategies. In equally, a lot of process automation is happening. Let me tell you that all of this process automation involves certain spend and then expenses. One needs to plan it nicely even on GST impact of that, because are you buying certain services from outside India which is making you paying payment RCM immediately, or we are doing some transactions which is effectively not helping in terms of availing the credit. More importantly, many of you have a multi-state operations. Where is that invoice being raised in relation to that service provider? Am I in turn distributing rightly to all the locations, or it is getting blocked at some location? Do I have an exempt supply in a particular location vis-a-vis all taxable supply? Where is the invoice being raised by the supplier? For all of this new way of doing the business, it always has some GST leakage, and we need to be careful about in terms of planning that, and in terms of the GST angle to that as well. Fourth is very critical, where revisit the contractual arrangement for capital expenditure and procurement. We have seen that many of service providers keep on doing a lot of capex. Transactions such as buying the equipments, buying certain importing certain equipments. But what we had seen invariably in many of the cases is that the service providers are not looking at and availing the benefits which are provided under the various incentive schemes, such as EPCG scheme, for example, such as buying the goods from a project where the India has signed the treaties with various countries where the rate of basic customs duty has gone down, or benefits such as SCIS scheme where you can claim the SCIS. While for last year and this current year we are awaiting the scheme, but still one needs to reevaluate our STPI position, reevaluate our SEZ position, because now the mantra clearly management has given us the cost optimization, and relook at it, all of these provisions, whether it's a capex. Now I'll tell you, one of our big service provider into an IT sector, he was constructing a big building. Now you all know that we have a bar under section 17(5) in terms of availing the credit of what is gone into a construction of an immobile property. Now, if you give a lump sum contract or a free supply, okay, you do labor, I will buy cement and steel and give it to you. Cement is liable to 28% GST. And if a contractor is charging 18% GST, so 28 is a cost, 18 is a cost. But if you put that as part of a contractor scope, he will be entitled to take a credit of cement and only charge 18% to you. So there are lot and options which one needs to evaluate for all our capital procurement, all our capital spend, or relooking at my current structure, the way I am operating, is there any benefit which have been provided under the incentive schemes, under the foreign trade policy? If we are doing something domestically, can I do something differently, which will give me certain cost optimization? Time has come that relook at all those positions minutely and examine the tax position again. Revisiting the tax modalities, be it ICD, ISD, be it cost charge, be it direct invoicing. One example which I had just given, but there are multiple transactions. Should I put it into part of ISD? Should I treat this as a cross charge? We know that this issue is still going on with some negative ARs have come in, and government is still not clarified. More importantly, the salaries of my people, which is the management people, all my CXOs, whether I need to include that as a part of a cross charge or whether that should not be included. All of these issues, please revisit carefully the transactions so that it does not have any GST leakage. While it is always good to be a conservative in terms of tax position, but not necessary that we will have to look at it very differently when it comes to now a cost optimization into the new normal way of working the business. Very critical that we all need to look at these positions and see where we can bring the cost optimization from the customs or a GST perspective. Moving on to the next slide, vendor and customer focus. Clearly now, one mantra, again another issue which is going on, that give a priority to vendor, give a priority to the customers. Now, what are the issues which one can look at it first here? The first thing first that we would advise, that let's have a cautious approach with your vendors, because the way the cash flow is in the market, given the cash crunch which is going on in the market, we would find that many vendors are defaulting in complying with the GST. And we all know that even if vendor does not pay the tax, eventually you will not be entitled to take a credit even if I have deposited to him. So what many of our clients have started doing is relooking at their vendor position, start applying in a manner where category 1 supplier, category 2 supplier, where they are 100% sure that the tax will be deposited, then they will reimburse. Where they are not very sure about tax being deposited or not, they won't make the payment to these suppliers till they don't get the GST proof of payment. So very important in terms of the vendors as a cautious approach as opposed to a liberal approach which had been taken in the past. Moving on to the next issue, which is really coming up, the customer strategies now. How the customer strategies are really evolving. Go to the next slide, please. Yeah, the customer strategies. Now, liquidity incentive, for example, we have seen now many businesses are coming up with 2-3 different schemes. One, that okay, fine, I have outstanding payment as per the contract, it is due after 6 months. Now if you pay me now, I will give you some incentive, I will reduce the price, I will calculate the net present value and please pay me. Or I have an inventory which is lying at a dealer's location, maybe for the services sector, where we know that in case of a software and all, where your dealer network for selling a software, all the package softwares is a very important one. How are we effectively managing that sort of a transactions for a telephone sector, or for in terms of your insurance one, where policies are raised through the various insurance agent, or whether it in terms of your businesses with the e-commerce platform. So now every businesses are demanding more cash. Every business will be demanding the liquidation of the services inventory or the goods inventory, which is what we wanted to push in the market very aggressively. And in that sort of a context, a lot of new schemes, incentive schemes, which will be floated by our marketing team. And we need to be careful about that all of these incentive schemes will have a GST angle to it. Are we GST compliant? That's the first thing. Second, are we getting exposed to any transactions? So we all know that we had one circular 105, wherein incentive granted post supply to your customer is being treated like a separate service being rendered by customer to you. While that circular has been withdrawn, but we can't stop authorities to taking that interpretation. So we will have to be careful about when we start planning the new incentive scheme, new marketing tool, are we compliant in terms of the GST issues in that aspect? Secondly, determination of milestone for the purpose of GST. Very important. Whether in terms of the GST, are we meeting with the milestone? How this has been defined nicely in the contract? Because what is defined in the contract play a very important role, because that has a direct consequence in terms of Rule 42 of the GST law, and one needs to be very careful how this has been defined in the contract now. Restructuring the contractual arrangement. Many of the cases we take a composite supply contracts where I will do the once to multiple supplies in a part of a same supply. I defer my service considerations, keeping in mind the different sort of an activity being done. Now start relooking at those contractual arrangements where I can start buying and taking more credits and trying to do something different in relation to the contractual arrangement. With the customer also, it has a different focus now. You will have to start looking at those sort of customer strategies in terms of evolving era. Moving on to the next slide, that as I said, now new business partners, whether it's in terms of discounts, whether it's in terms of price variation, one needs to be definitely careful about in relation to all of these schemes being floated, and needs to be understanding of that. Moving on to the next issue now, implementation of a new normal. One, there are new regulatory regime which is coming up, which we need to be compliant with. At the same time, we also need to look at it, our own positions, what's happening in terms of the GST law under this new position. The first one, that we have been asked to buy a lot of sanitization related material, the temperature measuring equipments, some PPE kit for the people. All of these have been new regulations which have been effectively implemented, or the guidelines have been issued. Therefore, one question invariably coming to our notice is, when I pay a GST on all of these items, am I entitled to take a credit? Very important in that context, when we had analyzed this position, in terms of section 17.5, there is a bar to take a credit on any goods which are used for a personal consumption. Now, when we looked at it, this sort of things that we are buying regularly, can we say these are used for a personal consumption? Answer may be no, because this is not for the personal consumption, this is for the safety and health issues of the people, and therefore it should not be qualified as contemplated being a personal consumption. When we have looked at it in the context of all jurisprudence, we had a positive rulings like safety shoes or safety gloves, whenever they have been provided as part of a safety purpose in the factories of this nature, the credit has been allowed. These have not been considered as a personal consumption. So all of these items that we are now buying, we should be entitled to take that as a credit. Moving on to the next one. Now, implication when mobility is hurdled. Very important, because of the new normal. We are not mobilized. We are working from home. There have been lockdown situation. So there are three impact points which are coming up from a direct tax perspective. First, for the individual. If we are taking some services from an individual who is non-resident, or we are asking people to go out and provide services who are non-resident. Now, given that there is number of days stay in that particular jurisdiction, because of the lockdown, the residential status may undergo a change, and we need to be careful about determining the withholding tax liability or even the personal tax liability for their own. Therefore, need to relook at it, the residential state. While we all know that OECD has given the guideline that they should be excluded, but that's all we know has a persuasive value at the best, but will not support in terms of taking a legal position for excluding that stay for the individual. Second, the consequence is that for the companies, we have a concept of service fee or installation fee in various treaty. Depending upon the number of days stay in a particular country, consolidated across all the projects, whether the company is having permanent establishment in India or not will be decided. Now, because of this lockdown, suddenly which we are planning to leave India on March 15th or March 10th and got locked down in India, their number of days stay in India is been changing, and suddenly they may expose to having a permanent establishment in India. Third, Many of our organizations have a foreign companies where we had structured or we have analyzed the impact of poem place of effective management being outside India. But now our senior management could not travel outside India. The board meetings could not be conducted, and a lot of decisions have been taken by the parent company or the core companies based out of India. So please examine this sort of provisions. Are we not exposing ourselves to a poem sort of exposure, and need to be really mitigating of that as well simultaneously. So when the people's mobility has been impacted, it has a tax consequences which we need to be really carefully examining. Moving on to the next issue where mobility of goods have been impacted, but before that we have issues where transfer pricing also, where many of the related entities we work on a cost plus basis model. That cost plus markup is been going through a change now, and one needs to be careful about how much that markup, what is to be accepted by the TP authorities. More importantly, from a GST perspective as well, we have a situation that what is considered as export only if we receive the payment. But if we are merely doing the adjustment for the purpose of tax and not receiving that payment, we have a challenge, because then we will not be able to get a exemption or a zero rating, which is being provided for export of services. Simultaneously, even for TP, we have a concept of secondary adjustment now. And if you don't receive, you will end up paying the secondary adjustment and a tax on that as well. So we need to be very careful in terms of all of these transfer pricing issues, including the exceptional items that has been done in terms of the adjustment now. Moving on to the next issue, is a donation and humanity. And this is how the last response point that we have to COVID, for COVID in terms of response and donation. One of the, again, a famous question which is coming up, that if I'm spending something for CSR, many of the organizations or a group have spent thousands of crores on CSR, and whether on a regulatory purpose as a mandatory or on their own volition, whether I am entitled to take a GST credit. One simple thing, what you are paying is as a in donation in cash. Clearly, there is no GST, no question of effectively, worrying about GST. Whereas something which is paid in kind, you are buying the goods and distributing free to the beneficiaries. Will that be considered as available to us as a credit? While we have a one interpretation and a challenge where we have a bar in terms of 17.5, what is provided as a gift, no credit is available. Now, whether this would constitute a gift or not, it is a very subjective and interpretative issue, and needs to look at it on a case to case basis, whether this will be considered as gift or not, and then decide whether the credit will be available in terms of that position. Very important in terms of, therefore, that strategy is getting evolved, whether it I should have a cross charge, whether I should have a separate registration, what are the administration charges, everything has been looked at it on a cost benefit analysis perspective. Everything is need to be looked at it into intervening period or long term strategy or short term strategy, and therefore we believe that giving importance to this, we need to really be looking at out of the box even from the tax perspective, and trying to effectively get this as a saving, or whether the cash preservation or the implementation of new normal in a most tax efficient way. Moving on to some of the responses that government has given, we all are aware, of course, but quickly to bring out some certain things to your notice: direct tax or indirect tax. Any statutory payment which was due, option has been given to pay this till 30th June, of course, with an interest, a reduced interest rate of a 9%. Unfortunately, we were all expecting that this should be without interest, but Government of India has given the time to pay that amount only with a 9% interest. Second, most importantly, on an indirect tax side, also the similar extension being granted. Any statutory filing, be it appeal, be it reply to the show cause notice, which was falling in this period, which is mid of March to end of May, then that is also getting automatically extended in June. Therefore, you have a time period to file all those statutory filing as far as the appeal and replies and all of these matters are concerned. One important continues to be required to be filed on time, while the option has been given, to pay the tax with a interest as an optional thing, but the return filing date has not been changed. And therefore, one of the issue which is coming up, many of you are also into semi PSU and sort of a transactions where whether our auditor will qualify this being a non-compliant, and because the return filing date has not been extended, even if you are opting for a payment with a 9% interest, there may be a potential issue which may come up where the return may be referred in a CARO or any other audit observation being filed delayedly or belatedly, and therefore one needs to be careful about being that sort of an issue in terms of while opting for this 9% scheme. Moving on to the next issue there is in terms of some of the transactions move on which have not been effectively opting for relaxation or not is all case to case basis, one needs to examine, go down. Some of the provisions, as we discussed, have not been relaxed, whether it's a time of supply payment, date of raising of invoices, GSTR 1 filing, furnishing of returns, levy of late fee for return late filing. They have not been relaxed by the government. And more important provision which has not been relaxed of this 180 days period where one should have got the time. Go to the next slide. 180 days period to make the payment to the vendors. That time is not been provided. We need to make the payment to within 180 days to make available as a credit. So some of the provisions have not been relaxed. These two amnesty scheme which was there, Vivad Se Vishwas or a Sabka Vishwas scheme, there have been some extension, but that again, Sabka Vishwas is of course all application only for making a payment. The extension has been granted. Vivad Se Vishwas, of course, which was having some additional payment required if you opt till 30th June. That is now without additional payment. You can opt for the scheme in terms of Vivad Se Vishwas. Move on to the next issue. Therefore, what is the industry is already looking at from the government? Where a lot of representations have been filed, whether it's a payment of GST on a receipt basis, whether refund of ITC on input services under inverted duty structure, where my input services are 18, output is 12, my credit is getting blocked, so give me a refund of that. Option to all ITC based on invoice without any restriction on making payment to vendor, or rationalization of GST rates, where the lot some of the products are still liable to 28%. Hospitality sector, where already 18%, going through a really a tough time in terms of the business now, where the facilities have been used for the COVID and giving patients or the people of the employees, whether it will be considered as liable to GST. Government is giving support partially. You are collecting something from a patient at a concessional rate. A lot of these issues are also arising where we need a clarity from a government in terms of that. Second, ITC on various expenses even when hit by 17.5, such as CSR spend or 17.5 bar which is there, that should not be there now because this is in the interest of the country and a larger interest that businesses are spending this amount. Therefore, this is all important that one needs to really examine. Quickly bringing it to your notice what's happening around the world. Clearly, every country, most of the countries have been impacted and they are effectively granting more time to comply in terms of the tax law. Some of the important to bring to your notice maybe like a third line item there, where tax remission scheme, France, Indonesia, Italy, Australia have come out with a scheme where you collect the tax but don't pay to the government. So very important, like a tax remission scheme. Or maybe look at it the last on the slide where relaxing mobility related hurdles in Singapore. That as we see that if because I am locked down and I am stuck in a particular country, my residential status is changing. Singapore has come out with a specific provision that because of the lockdown, you are stuck in the country in Singapore, that period is excluded while calculating the PE exposure or residential status exposure. A lot of innovative things have been done by various countries. We hope that our government will also be looking at the phase 2 now, will come out with the package, will give some more relief to the industries and businesses to fight this COVID and come to the specific of these issues. We once again thank you all of you for joining this webinar, and now we are open to take some questions. I'm joined by all our partners, Kumar Vishalaksh, Rahul Khurana, Stella, and Mitesh Vidushi. So happy to address if you have any question on be it indirect tax or a direct tax matters. You can unmute your line, put the questions, or you can also put on your chat box as well. Okay, fair enough. I think happy to conclude this session. Hope all of you take good care of yourself and the family. And if you still have any questions, happy to address. Please write to us by email, and we will take care of those. And we once again thank you all of you for joining this webinar. Thank you very much.
Thank you, sir.
Thank you all.